Nigeria's central bank to clear all backlog of FX demand in the country as the new interbank FX trading begins today. The Nigerian Stock Exchange opens bullish today at 0.35% after the takeoff of the new interbank FX trading. Plus, the International Monetary Fund warns that a UK exit from the European Union could mean the UK misses out on up to 5.6% of GDP growth by 2019. Good afternoon. This is Business Incorporated coming to you live from Lagos. I'm Chimize Obi Iwagu. Well, we'll begin here in Nigeria, where the central bank has resolved to clear all the backlog of FX demand of about $5 billion in the country through spot and forward settlements. According to a statement released by the Acting Director Corporate Communications of the Central Bank, Mr. Isaac Okorafo, the move is to engender confidence, ensure credible price formation, and sustain the integrity of the Nigerian interbank FX market. This comes as the new flexible Forex trading begins today. Channels Television is tracking that live from the FMDQ OTC securities market, and we will be crossing over to the market to get the intraday analysis shortly. The UK Chancellor George Osborne says leaving the EU would be a one-way door to a much more uncertain world. According to him, the hit to the economy if Britain votes to leave on Thursday might be worse than forecast. As campaigning resumes after a break following the killing of MP Joe Cox, Mr. Osborne says Brexit may be for the very rich, but it is not for the working people of the country. With just 4 days to go before Britain votes on whether to remain in the EU, the opinion polls suggest the referendum will be close, with many voters still undecided. Meanwhile, the International Monetary Fund has warned that a UK exit from the European Union could mean the UK misses out on up to 5.6% of GDP growth by 2019. The IMF, in its annual UK Economic Outlook, said the net economic effects would probably be negative and substantial. But economists for the Brexit campaign said the consensus that a UK exit would be bad for the economy was based on flawed EU-centric models. There are 5 days to go until the UK votes on whether to stay in or leave the European Union. In Asia, shares rallied today on the latest British opinion surveys showing a resurgence of the vote to remain part of the European Union. Global markets were hit last week by nervousness ahead of Britain's June 23 vote on whether to leave the EU. Japanese shares have kicked off the week's trading with strong gains despite a setback in exports. The country's benchmark index, the Nikkei 225, was up by 2.3%. Other stock markets in the region also saw strong gains at the start of trading today. South Korea's Kospi finished 1.2% higher, while Australia's ASX 200 was 1.8% higher. Mainland China's Shanghai Composite was flat at 2,885.81, and Hong Kong's Hang Seng followed the rest of the region higher, gaining 1.8%. Well, it's all about Brexit talks. Let's cross over to Frankfurt to see how this is being felt at the market there. Olaf Krieger, DWTV, Channels TV correspondent, joins me now. Good afternoon, Olaf. Hello, good afternoon, Olaf. Well, it's countdown to EU referendum and more warnings about UK leaving the EU are coming up. How is the talk of Brexit driving your markets today?
Well, as you might see, can see behind me, German top shares are on the positive territory. We gained more than 3.5%, and European stock markets overall rose strongly at the start into this new trading week of growing expectation that Britain will vote to remain in the European Union. But we also have to keep in mind that we are still talking about polls, not results. So finally, a Brexit is definitely not off the table. And investors as well as traders here in Frankfurt wants Britain to stay in the European Union. There's too much at stake, that much is for sure. And there are so many undecided voters in the UK, and that's what Prime Minister David Cameron is going to do to get them back on track and to vote that the UK stays in the European Union. But this thing ain't over till Thursday, till the upcoming referendum.
Tell me, what is the importance of a Brexit for the City of London and even Frankfurt, the city where you are standing right now?
Well, if the Brits are really going to leave the European Union, this will be, that much is for sure, a hard blow for the City of London, because London is something like a very important capital on the international financial markets, and many banks are supposed to leave the City of London to do elsewhere their business, probably here in Frankfurt, but also in Paris. And that of course means that London will lose the international reputation, will lose a lot of business, and finally a lot of money.
Well, I guess we have till Thursday to know what the results would be. Now, Olaf, it's the first trading day of the week. What company is making news today?
Well, banks, of course, because new reports show that the pro campaign in Great Britain is getting the upper hand, and that's always good for the banks, as you can imagine. But also the German car maker Volkswagen is back in the headlines with some good news, because some analysts are pretty much convinced that Volkswagen is out of the woods at the end of the year. And finally, the oil price, and it's also a reason, because he's been under heavy pressure from the Brexit, but now he extended Friday gains. Brent crude's top $50 a barrel, but commodity expert I spoke with said something like, this is only a snapshot, because there's still no common ground between the oil producing countries to keep the oil price constantly up above $50 a barrel. So,
oh, well, thank you very much for your time, Olaf. Well, that was Olaf Krieger, DWTV, Channels TV financial correspondent, reporting there from Frankfurt Stock Exchange. Now, will the UK remain in the European Union? Jill Maladrino, VOA Channels TV business correspondent in New York City, meets with Matt Tuttle, CEO and portfolio manager for Tuttle Tactical Management, to discuss the potential impact on global markets.
The biggest issue facing markets this week is the Brexit vote on June 23rd. Will the UK stay or leave with the European Union? Matt, what are the potential impacts to the market should the UK leave?
I think the potential impacts are going to be huge. First off, there's going to be a whole bunch of uncertainty about what that means. But really, to me, the bigger issue then becomes, is that the beginning of the end of the European Union? Because we've always thought it's one of those ideas that looks really good on paper, but in practice, it just can't possibly work. And this could be the beginning of the end. And, you know, that could end up being a disaster for markets.
Do you think it's more of the contagion effect that's critical at this point? Because the UK, they already have their own currency. They have the Bank of England. It's not like much will change day to day. It's more of the outliers.
I think it's a lot more the uncertainty. We have no idea what's going to happen if they do leave the European Union. It's never happened before. There's nothing we can point to where we could say, you know, hey, France did it, no big deal, you know. So I think that uncertainty, at least short term, markets are not going to like. You know, as it all kind of filters through the system, then who knows, maybe things stabilize. But short term, it could be a mess.
Now, you're a tactical manager. How are you positioned at this point?
Well, we can move on a dime. So right now, we're about 55% invested. We can bring that down to 0. We can bring that up to 100. Because, you know, to us, if they vote to leave, we're probably going to 0. And if they vote to stay, we're probably going to 100. And then we'll look and see which sectors within that are the strongest. But we're going to be ready to move one way or the other, because there's either going to be great opportunities or it's going to be one of those get out.
All right. Thank you very much, Matt. We'll have to catch up in July and see where we actually are at this point.
All right, thanks.
Okay. For Channels TV in New York, I'm Jill Malandrino.
Right, we'll take a quick break now. When we return, we will cross over to FMDQ to see securities market for the intraday analysis of the FX trading. Do stay with us.